Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how I made a little over $1,500 by swing trading stocks on my more recent trip to Tennessee. So I hope you guys all enjoy it. If you guys have any questions, feel free to ask down below. And guys, for those of you that are new to the channel, my name is Carter. I've been a full-time swing trader for over 6 years, and we do have an amazing school where I teach people how to find stocks with opportunity, my strategies, my mindset, in order to become a successful swing trader. So check it out down below. You guys can use code YouTube for 20% off. Only 2 spots left, so I'll see you guys in there. But guys, let's jump into this here. So starting out with swing trading, what do I look for? So for me, the first thing you guys need is going to be a broker. So a broker is just how the average investor has access to the stock market. So the one I've used, because I've gotten a ton of questions, is Moomoo. They're absolutely fantastic. They have good charting, scanning, and pretty much indicators that you would need for trading. I'll put them down below. They're absolutely fantastic. So let's jump into kind of the strategy and approach that I had with this upcoming week. So you guys know, for those of you that are course members and members, that I was more recently on a family trip. Now, unfortunately, I was in the middle of Tennessee where my service was very, very, very bad. Now, what that means is I only could pretty much use my phone, honestly, for all of my trades, but that's okay. The good thing about brokers nowadays is most of them have mobile apps, and that's why you guys know I was unable to stream last week because of that. So, I wanted to be upfront about that and just tell you guys that I just had bad service. We tried getting better Wi-Fi, but it just didn't happen here. So with this past week here, we did have a couple of trades. We did have, a lot of good opportunity here. And all these stocks are stocks that we talked about the week prior. So let's jump into this here. So the first stock here is ZION. Now, the reason I love it was we have this really good upward trend. The stock has sold off down to this beautiful, beautiful dark blue line. And you guys can see it hits, and we got in good tendency of getting buying pressure. So we took a good trade here at about $40 and about 50 cents, setting our stop loss just below this moving average line. So for my approach with this was actually very, very simple here. So let's go ahead and draw this out so we can see it. So hopping in at about 450 with a target of resistance up here gives a really, really good risk and reward. So if we actually can draw this out here, you guys will see. So if we have our target up here at resistance, we set our stop just below it, the risk and reward is about 4 to 1. So risking about $1 to make $4. So with this trade here, as of right now, we're only up about 1%. So it's not that big of a profit gain, but in the grand scheme, what makes a successful swing trader is base hits. So those 2-3% returns is where you're going to make your money. You're just going to have to do that compounded over the years. So this was a very small percentage of my win here this past week. Stock number 2 is TEF. TEF here was the stock that we called out right on that 90-day moving average line. You guys know that I love moving average lines. The top 2 that I love are going to be the 90 and the 200-day moving average line. So what these act as is support and resistance. So when the stock is above it, they act as support, as you guys can see where it hits it. We had that great move, and you guys can see it actually hit it again here at about 41, and it's moving its way up. Now, another reason I loved it is because the RSI, the relative strength index, this pretty much tracks momentum inside the stock. So what this means is when the stock was trading for about a 24 on the RSI, this is considered an undervalued point for the stock. So if we actually draw this out, you guys can see that the last point that it was trading for 24 was right in here, where it went from about $3.95 all the way up to about almost, $5. So it was a great return. So we took a trade here near and around, this 90-day moving average line, setting our stop loss just below it. So we had a pretty decent risk and reward if we can draw it out here. So hopping in there, setting our stop loss just below it, having our target back up here. it's about a 5-to-1 risk and reward. So risking $1 to make $5, which is a really good risk and reward. Another thing here is you guys can see how the RSI looks. So we're actually starting to approach where we could actually get more buying pressure, because looking back here, let's go ahead and make this, a little smaller. Let's delete this so we can have a little more room so you guys can see. So historically with the MACD, you guys can see that when the signal breaks above the MACD line, that always represents a good entry. And so we're actually starting to approach that where we could see a better squeeze. So we'll see what happens. Definitely worth noting though. But let's move on to the next one here. So stock number 3 that I want to talk about is ticker symbol MET. So MET, we had that signal break above, the MACD indicator. It was undervalued on the RSI. Let's go ahead and remove the MACD so we can get a better visual. It was undervalued on the RSI, trading for a 24. Last point was right in here where we had that great move. Another thing, it was right on that 200-day moving average line, which acts as support. So we had a lot of good buying pressure involved, which caused a great amount of explosion. Now, stock number 4 here that we're holding here is just a stock that I've been holding for a while. It's ticker symbol EXEL. We hopped in near and around this trend at about $20. And the approach that I had to see if we can get a push up to 24. And honestly, I probably should have just taken my profit here. It would have been a smarter play. But I just kind of had my stop loss in mind below 21. And the reason I had that mindset is because of the risk and reward. Right now, the return from like $20 to 21 isn't that big. I thought we could get more buying pressure if we could get a squeeze above, the 200, and that's kind of what we saw. We'll probably end up taking profit if we can get to like $22.50 or $23, but still it was a great return. Now the last one is ticker symbol BGC. BGC here is a stock that we traded for a couple of reasons. The first reason is it was above the moving average line, acting as support. The second reason, it was undervalued on that RSI. The third, it had this great trend where we could get a huge move from $8 to $9. So we had a lot of good momentum, a lot of good buying pressure involved. And honestly, I think we could still see that move happening very shortly here. Looking at the MACD isn't the greatest, but we are slowly approaching that reversal point where it does represent an opportunity to get more buying pressure involved. So BGC, definitely one to at least throw on watch and see what happens. But these are the plays here that we're in on and how I made a little over $1,500 from these stocks. So if you have any questions, feel free to ask down below. And guys, I know I am sorry about not going live this past week, but expect lives to return back to normal. So I hope you guys all enjoyed it. Like, subscribe. Don't forget to check out our school, and you guys can use code YouTube for 20% off. I'll see you in there. Like, subscribe, and I hope you guys have a fantastic rest of your day, and take care, everyone.